Hi there. This is education content only, not financial advice. We are expecting certain changes to come. Beginning of June, there are multiple instances where the downtrend would trigger a trend change or continuation. And this is just the beginning. We have to go back to the bigger picture. I issued a community post warning that Bitcoin is testing the medium-term uptrend support. If it fails, the next levels to test are 68K, 63K, and eventually 60K. But that's not even the end of it. So what are those levels? 68 is the one being tested now, the green key level. 63 is the next key level, the yellow one. Why these two levels? The first one, 68K, if we look over here, both this year and back in 2024, there are many instances where we see candlesticks finding support or resistance at this level. However, the bigger commitment comes at the 63K. The 63,000, if we look at these two gigantic candles with much higher, over double the average of volume, meaning the whales committed at that point on the February 5th and 6th. If you look across the board, including Bitcoin and a lot of altcoins, you can find those two crazy candlesticks. And they may change the game now if it is coming back down to retest this level. Now, we have to get back to the big picture to understand what's going on. I've shared many times in the past sessions for months, comparing these two scenarios with you, okay? The two cycles, the first one, back in 2021 all the way into 2022, the distribution. Look at the blue text. Okay, the two blue boxes over here. After the upthrust, we've got these two, you can say relief rallies, okay, whatever technical term you say. In Wyckoff method, we call that last point of supply. Fast forward to where we are. After the upthrust, after the initial very short sideways, much like what happened over here, the two relief rally happened. Okay, we are in the second, coming down from the second right now. Look at how similar the shape was. Okay, it doesn't have to be exactly the same, but close enough, right? You see initial drop, first bounce, second bounce, and then it dropped further. Initial drop, first bounce, second bounce, and now it is coming back to the level. The tricky part here is that this cycle, this distribution cycle, remember all the blue text, comes with a reaccumulation period. Okay, this has not happened back in the 2021 cycle. Okay, it has a mild sideways period before the buying climax happened. Okay, this time, the period, you can say, maybe this is the same period, okay? But this lasted much longer, so we have to consider it a little bit different compared to those that happened just for 5 to 6 weeks. This is talking about 231 days, okay? 7 to 8 months in total. So when the price comes back to this range, the 60K all the way to down to 51K, okay, the red key level, the green to the red. Why? This reaccumulation over here, from around the green to the red key level, okay, somewhere between the orange 58.5 to 51.5K. This, when the price comes down, expect some similar sideways trading to happen. Okay, until when? Okay, you may ask. So this comes to the other picture I showed you many times in the past few sessions. This Fibonacci time zone as well as Fibonacci ratio. The vertical lines are the Fibonacci time zone. So if I switch off the retracement ratios for a minute, look at the peaks. Okay, these blue lines is the final peak. Okay, every time since 2017 December, okay, 2021 November, and this time 2025 around October. So almost, 47 months roughly every time, very consistent. Okay, we have the final peak. Okay, now more important is the valley, the trough. Okay, the lowest point where it's bottoming out. First time 2018 December, second time 2022 November, roughly 47 months again. This time, if it is going to be 47 months, it would be October 2026. But at what level is the next question, right? So now comes to the Fibonacci retracement. The first distribution cycle, when it gets to the lowest point, it landed somewhere around the 0.786, okay, the light blue line over there. Second time, 2021. Again, it bottomed out around 0.786. Now, the third time, we are entering a similar situation. The 0.786 from the peak. Okay, this, you don't see the price here, but you can see what's over here on the left-hand side. If I switch off the first two, you can see this line cut across the midsection of the mountains. Okay, not the lowest point, but right between the peak and the bottom. So going back to the Bitcoin chart. All right, here, where is this midpoint? Okay, this is the bottom. This is the top. The midpoint is somewhere around here, around mid 30,000. So if I switch back on the drawings, mid 30,000 is right around these, between the orange key level, lower orange key level to the yellow key level, 35500. And that is very close to the long-term channel. Okay, just the white box, long-term playground of Bitcoin. Because this box is tracking, assuming Bitcoin is behaving as the narrative says. Okay, it's inflation hedge, and its base price should be higher and higher over time. So if we look at the 2018 bottom, and then 2020, and eventually 2023, if this time it comes down, again touching the bottom, not a must, but if it really accumulates around the bottom, the timing matches. Okay, when we get to October, November time in 2026, okay, look at the bottom over here, the date, October, November. That's exactly around this period, if it really comes to hit the bottom. Okay, let's see whether that's going to happen. It's only about 4.5 months time. So be cautious if you're trying to catch the falling knife. It may bounce, like I said, between the 51,000 to 68,000. So that's a very big 30% range. Just to manage your risk, okay? Don't get in without a stop loss. And if you get in now, if it really drops to 51.5K, that's about 20 to 25% drop. So that's the sharing I want to give you quickly today, given the situation. So see you in the next session. Cheers.